Financial Advisor Insights, brought to you by OppenheimerFunds.
What types of risks should investors be protecting themselves against in today's market environment? I'm here with Mark Hamilton of Oppenheimer Funds. Mark, in dealing with clients every day, how would you say their tolerance for risk or their definition of risk has changed since the 2008 crisis?
Well, I think certainly when you go through a searing, once-in-a-lifetime, we hope, environment like that, it really changes the way that people think about risk in their portfolios and really focuses them very much on the near term. That's just part of a natural human psychology, right? We're very good as humans at focusing on a risk that's staring us right in the face, but we're probably less good at dealing with risks that evolve over a long period of time. And I think that's one of the concerns coming out of this period, that what worked well on the savannah during historical times doesn't necessarily work well during modern times when you've got a longer term time horizon to worry about as well.
So how would you say that's impacted your clients' philosophy or strategy towards investing?
Well, clearly they've become much more conservative, right? We've seen massive flows up until recently into bond funds and into cash and other so-called safe investments. And that's led to a real change in the structure of their portfolios.
So how should they position themselves then for long-term success?
I think that what, to some extent, they need to take a step back and think again about their longer term needs and position themselves to better meet that. It's really hard to see how, with cash at zero and bond yields barely above inflation, how those are going to be sufficient to allow people to build the kind of assets that are going to be necessary for the long term to fund, for example, their retirement.
Well, so next week we're going to talk about how investors should go about meeting their long-term needs. For now, thanks so much to Mark Hamilton. I'm Brittany Umar for The Street.
Financial Advisor Insights, brought to you by Oppenheimer Funds. Protection is positioned as an investment goal. Investing in certain securities may help to hedge against certain risk, but does not imply any guarantee from loss. Mutual funds are subject to market risk and volatility. Shares may gain or lose value.